Hey guys, how you guys doing? My name is Matrizi, and on this video, we'll be talking about trend lines. The best way to draw trend lines in the market to make the most out of the market moves. If you are a new viewer, please don't forget to subscribe to this channel, leave a like, leave a comment on this video, and also turn on your post notification on this channel so you don't get to miss out on my future videos I'll be putting out. Then, if you are a returning viewer, please like this video so you can get to more audience, and also share it and comment, and also turn on your post notification on this channel so you don't get to miss out on my future videos. Let's get right into the screen real quick. For you to understand trend lines, you need to understand a bit of market structure. I will explain market structure in a different video. Just stay with me, guys. For trend lines, you need to understand what they call a market structure. Market structure is basically how the market flows. Market flows with a push up, a retracement, or a pullback, a push up, a retracement, or a pullback, a push up, a retracement, or a pullback. So basically, this is how the market flows when it's uptrending. Then one is downtrending, is the same thing but in a reversed form. A push down, a retracement, a downward movement, a retracement, also a downward movement, a retracement, then the impulsive move to the downside. So basically, this is a movement of a downtrend, while this is a movement of an uptrend. So now, how do we draw a trend line? This is trend line 2. Basically, to see the trend line 2, you can come to this uh, dialog on your trading view. Then you look for trend lines. When we are talking about drawing trend lines and using it as a strategy-based rule, you are looking at how will the trend line give you an entry? How will the trend line suggest a trade for you? Basically, that's the concept of how you use trend line for a strategy. If we do a little bit of market structure, this point is called a low. This point is called a higher low. Why? Because it is higher than this low. It's a low, but it's higher than this low. It's a low compared to this high. But it's higher than this low. Then also again, around this point too is a higher low. Now, if you consider this high, this can be called a high. But if you go higher than this to form another pivot point, another high, this is a higher high than this high. So this can be called a higher high. Then also, if the market reverses here again, this will be called a higher high compared to this high. So now, how do you draw a trend line? So from the illustration above, you can see that in a bearish trend, we have a low, a high, a low, a lower high, and a lower low. So we are looking at how we can get trades on a bearish trend using trend line. Basically, a trend line connects two highs on a bearish trend. So to draw a perfect trend line on a bearish trend, you are connecting two highs and extending the trend line to the future to find more trades. Now, on this first high, we draw a trend line, then connect to the second lower high, then extend it to the future to see if the market can come back to this point to retest this trend line, then sell from there. Now, on a bullish trend, basically we are looking at connecting the two lows. That's this low and this higher low, connecting them with a trend line, then extending into the future to look for trades. Now, you're expecting the market to move from this low to this high to this higher low, then create a new higher high, then drop from here, touching this trend line, so we can get our buy entries here to extend the market higher to attain a new higher high. So this is how we capitalize on the trend line as a strategy, basically. Now, if we go to the chart and try to implement that on the chart, now if you look at this area, for example, we can call this a high from here. This is the top of the market, basically. Then we see that the market created a low at this point. Then it tried going up, but it could not break above this high. So what will you call it now? We'll call it a lower high. Because it could not break above this high, we call it a lower high. So if you label this place, you can label it a high, a lower high, a high, a low. Then because this could not go above this and market turned from there, reverses from there, this is called a lower high. Then we see the market came down from here, broke below this low, did a lower low below this low. Definitely this is going to be called the lower low because this is the point where the market reversed and tried going up again. So this is called a lower low. At this point, it's a lower low. Then we see the market continued going down because it did not break above this high. This is called what? A lower high. This is called what? A lower high. So here it's called a lower high because it could not break above this old lower high. Now we now have a new lower low. Now remember the concept of a trend line. Draw a trend line. I told you that you draw a trend line from two lower highs on a downtrend. So we have a lower high here and we have another lower high here. Definitely, we can extend our trend line this way. This is how we can extend our trend line. As you can see, the first touch is here, second touch is here, then the third touch is around here. So basically, you are looking for the market to come back to this point so you can take your entries around this point. Your stop loss can be above this lower high. Then you can target 2 to 1 or 3 to 1 for your TP. This is 2 to 1 TP, this is 3 to 1 around this point. Basically, go to the both of the risk to reward ratios. As you can see, this is a simple ideology of using trend lines to get trades. Now, this is a bearish example. Let's look for a bullish example. Now, if you look at this area, you can see that market formed equal lows here, basically. From the low, then tried moving up here, then reversed here again, then try going up again. So if we want to label it, we'll label this a low, then this a high, then here would be, because this low did not go lower than this low, rather it is higher than this low. It's called what? A higher low. Because this market moved up and passed or surpassed this high, it made a new high. A high higher than this high is called what? A higher high. If you draw our trend line from this low, connecting this higher low, we are expecting the market and extend to the future. If you draw a trend line from this low to this higher low, we extend it to the future, then expect the market to bounce off this trend line. So if you can observe, the market came from this low to this higher low, then around this point touched on this area, then you can take your entries from there. Basically, a trend line is a zone. It's not basically a line, because if you take it as a line, you can make some mistakes in missing entries like this. I taught you guys pin bar candles in our previous videos. Definitely you understand that when you see this kind of candlestick formation, what candlestick formation is? This is a morning star candlestick formation. When you see this morning star candlestick formation around this trend line region, you are definitely seeing that this trend is continuing. So if I will be entering my trade after this candlestick formation appears on this trend line region, and if you look closely, you can also see that there's a support zone around this point. So this is a typical multiple confluence trade where you have your support and resistance working to in your favor. Then you have your trend line support also working in your favor, and you can have a morning star formation created in this area of interest. Basically, this is how I see and catch trades using trend lines and using confluences, basically. So you can target 2 to 1, and nicely the market goes 2 to 1, then start reversing from there. So you can also go back into your chart and look for more examples. As you can see, this is also a downtrend. You can look for, this is a high, this is a lower high. Then connect these two, this high and this lower high, then extend to the future. Definitely you will see an entry for a sell. As this is a pin bar candle. Remember, I talked to candlestick pattern. This is a bearish pin bar candle on the trend line formation. This is a bearish pin bar candle on a trend line formation. Definitely it's a multiple reason why you have two reasons why you can take this trade in this region. Then your stop loss can be above the timber candle, then you target a 2 to 1 or 3 to 1, depending on what your risk to reward ratio is. So, like I taught you guys, no strategy is the holy grail. No single strategy is the holy grail. Even if you are combining it with a confluence, you are still going to take some losses in the market. Not every time will you make profit. Look at this situation now. This is a high, this is a lower high, and you're connecting it to this. And you take your trade on this area, targeting your 2 to 1, for example. As you can see, the market, it didn't get to your 2 to 1. It didn't get to a complete 2 to 1. So what will happen? It means that if you're targeting 2 to 1 on this trade, it will reverse on you, then go to your stop loss. In this situation, you have to be disciplined as a trader to understand that these are the days where this your trend line did not play out. So since it did not play out, do not go and overtrade or revenge trade thinking that, oh, this thing came back to my stop loss. It's still going to go because trend line is the holy grail. No, trend line can still fail. It still fails. But the concept is you are meant to catch the days that it gives you money. The days it gives you your complete take profit. You hold those days, and the days is giving you losses like this, you manage your risk. That is why there's risk management. You manage your risk and take your one loss, either it's 1% loss you're risking or 2% loss you're risking. Take that your 2% loss or 1% loss and leave the market. Do not go back there and start fighting the market to give you back the money you just lost. You're going to lose more on that. So the concept is, if you can be disciplined alongside using any strategy in the world, any strategy, you are definitely going to attain profitability in the long run. So it does not mean that you will not make losses. You will make losses, but because you are applying proper risk management, your losses are going to be definitely outweighed by your wins. You get the concept now. So with this few explanation of trend lines, I believe that you can be able to have better trades and better entries if you can implement what I taught you in the trend line video. So I hope you guys enjoyed this video. If you haven't subscribed to this channel, please do so now. Subscribe to this channel and leave us a like, a comment, tell us what you feel about this video. Then turn on your post notification on this channel so you don't get to return my next videos. You can hit the link in the description box now to join us and start trading with us today. I give out free signals. If you also want to trade with my broker, the link is in the description box below. You can hit the link in the description box now to trade with the broker I trade with. Thank you guys for watching the video to this point. I'll see you in the next one. Peace out.